Jai Shri Gurudev. Hello everyone. Welcome back to my YouTube channel Janasnehi Edu Desk. My name is Ravi, Assistant Professor working in the Department of MCom BGS IMS Chikbalapur. Dear students, in this video I am going to explain the concept fire insurance claims and I am going to explain one problem with solution. Okay, how you going to calculate the claim amount under fire insurance. Dear students and friends, if you not yet subscribed to my YouTube channel, please do subscribe to the channel and comment to each and every video and like and share as much as possible with your friends and your colleagues and to whom so it may applicable. Okay, let me start with the problem. So here the question is, on 15th April 2020, a fire occurred in the godowns of a trader. Almost the stock which was fully insured was destroyed. See, in the question they have mentioned the date of fire accident, that is 15th April 2020. 15th April 2020. Okay, so on 15th April 2020 a fire accident is been occurred, the two in the godowns of a trader. The trader name is not mentioned, but anyhow it is happened in one premises. Almost the entire stock which was fully insured, the stock which was fully insured was destroyed due to that fire. The stock which was fully insured, see, it is clear that the stock is fully insured. We can say this is a fully insured one. So we have fully insured, over insured and under insured, right? So but in this question they have clearly stated that the stock was fully insured and that stock was destroyed. The salvage was taken at the agreed valuation of rupees 7,500. Okay, so the stock salvage is rupees 7,500. That should be considered while calculating the stock actual loss of stock. Okay, from last year's records the following details were obtained. Okay, if we are looking to last year's records, so we will get some details which is given below. That is, opening stock on 1st April 2020 rupees 1,20,000. See, opening stock on 1/4/2020. 1/4/2020, it is the present year. How you can consider that is a present year? Because so we know that the a fire accident date is 15th April 2020 and it comes in the accounting year 2021. In the accounting year 2021 that date comes, so that this opening stock is to be considered as for the present year. So it should be recorded in a memorandum of trading account. Memorandum of trading account. Why don't we prepare trading account? Because so they might give gross profit. Okay, let me check with that. Yes, nextly they have given purchases less returns up to 14th April 2020 rupees 5,10,000. So purchases less returns, already they have deducted returns. After deducting purchase returns, so the purchases value is 5,10,000 rupees, that to up to 14th April 2020. Up to 14th April means so up to the date of fire accident. Okay, so it should be recorded in memorandum of trading account. Why? Because this purchases related to present year. Okay, next point is sales less returns up to 14th April 2020 rupees 5,80,000. So this is also the same as purchases. So sales up to the date of fire should be recorded in a memorandum of trading account under credit side. Okay, next point is gross profit on sales during the last 5 years were 30%, 31%, 32%, 30% and 32%. See, they have given last 5 years gross profit ratio. Last 5 years gross profit ratio is given in the question. See, in the earlier questions, I have explained the same concept, but in different method. They didn't give, gross profit ratios, but related information is given. By that, we calculated, gross profit for the last 5 years, and based on that, we calculated average rate of gross profit. But in this question, so they have mentioned 5 years gross profit ratio, so that we can straight away calculate average rate of gross profit, and that can be considered as normal rate of gross profit. Okay, so based on this information, so we can calculate average gross profit ratio can be calculated. Okay, so after calculating that average rate of gross profit, we can go with next step. And next, work out the fire insurance claim. So they asked you to work out fire insurance claim, which means you have to calculate the claim amount which can be lodged with the insurance company. Okay, so this is what the question is. Hope you understand the question. Very simple. The date of fire is given and related information is given, salvage is given, and past 5 years gross profit ratio is given. Okay, so by using this information, we have to find out the fire insurance claim amount. Okay, so yes, shall we move on to the answer? Yes, we'll move on to the answer now. See, the step number 1. See, we know that in the fire insurance claims, we have totally 5 steps. In that, step number 1 is preparation of trading account. Dear students, in this question, the step number 1, that is preparation of trading account, is not required. That is not required in this problem. Why it is not required? Because gross profit ratio is given. If gross profit ratio is given in the question, no need to go with preparation of trading account, so that not required. Okay, yes, we'll move on to the next step. Yes, here is the next step, that is step number 2, that is calculation of rate of gross profit. Rate of gross profit, see, this is the step number 2. See, I already told you that, see, we already know the formula. The formula is rate of gross profit is equals to gross profit divided by net sales into 100. So this is the formula which we usually used to find out rate of gross profit. But the problem provides rates of gross profit of the last 5 years. So average rate of gross profit must be taken as the normal rate of gross profit. I already told you that. So in the question, they have given last 5 years rate of gross profit, so that we don't want to go with preparation of trading account, and based on that average, based on that last 5 years rate of gross profit, we have to find out average gross profit ratio, and that will be considered as normal rate of gross profit. How you can calculate that? Here is the step. Okay, here average rate of gross profit is equals to total 5 years rates, 30%, 31%, 32%, 30% and 32% divided by 5. Okay, in order to find out average, so total divided by number of years. Number of years is 5 years. So you'll get a 155 as a total divided by 5. So if we calculate as per this, we will get average rate gross profit is 31%. So that 31% is the average rate of gross profit. Hope you understand. Okay, next we'll move on to the next step, that is preparation of memorandum of trading account. See, memorandum of trading account usually prepares to find out the stock on date of fire. Okay, stock on date of fire. Let me see how it will be. Memorandum of trading account from 1/4/2020 to 15/4/2020. Why we have mentioned 15/4? That is the date of fire accident. Okay, yes, here is the memorandum of trading account. So here first we have to record opening stock, that is given in the question 1,20,000. Next, purchases less returns given, so we have mentioned like purchases, that is 5,10,000. If any purchase returns is mentioned in the question, no, so that is to be deducted, but in the question they already deducted purchase returns. After deducting purchases is given, so that is the amount 5,10,000. And next, gross profit we have calculated based on the sales. Sales is 5,80,000 into gross profit ratio we have calculated as 31%. So if we calculate, we'll get a 1,79,800. Okay, and if we come to credit side, sales we have mentioned, that is 5,80,000, and closing stock, this is what the balancing figure. So before writing this amount 2,29,800 as a closing stock, we have to total. After recording all these items, you will get a 8,09,800 as a highest amount. So we have to record the same amount both the sides. If we deduct 5,80,000 from these 8,09,800, you will get 2,29,800 as a closing stock. That is considered to be balancing figure, or it is also known as stock on date of fire. Okay, so this is how we calculated the stock on date of fire. We'll move on to the next step, calculation of actual loss of stock. How you can calculate actual loss of stock? See, first we have to consider stock on date of fire. So stock on date of fire we calculated, that is 2,29,800 rupees. In that we have to deduct salvaged goods. So salvaged goods rupees 7,500 is given in the question. So if we deduct that, so we'll get an amount. So if any fire extinguish expenses is given, so we have to add that, but in the question that is not given, so we have mentioned as nil. And next year you will get actual loss of stock, that is 2,22,300 rupees. 2,29,800 minus 7,500. Okay, so we got, so this amount as a 2,22,300 as a actual loss of stock. We'll move on to the last step, that is ascertainment of claim amount. See, dear students, we already know that by referring to the question, so we already know it is the fact that the problem clearly states that stock was fully insured. So stock was fully insured, hence the amount of claim will be the same as actual amount of loss. The amount of claim will be the same as actual amount of loss. No difference to the actual loss of actual amount of loss and claim amount. Why? Because the stock is fully insured. In case over insurance and fully insured stock, so the amount of claim will be the actual loss of stock. In this question, claim amount will be 2,22,300. that is actual amount of loss will be treated as claim amount. So the claim amount is 2,22,300. Okay, hope you understand. Thank you all. Jai Shri Gurudev. Please do subscribe to the channel, share, comment and if possible, let your motivate your friends to watch this video, and let them subscribe, comment and share. Thank you all. Jai Shri Gurudev.